Hello everyone, welcome to Banking and Finance with Chitrak. Today we'll be discussing the MCQs of Organizational Setup for KYC and AML. So let's begin. The first question is, what is the primary responsibility of the Board of Directors concerning KYC AML regulations in a bank? The options are to process all suspicious transactions identified by the AML unit, B, to ensure that the bank's control processes and procedures are appropriately designed, implemented and effectively operated to reduce money laundering and terrorist financing risks. Next question is to directly conduct all customer due diligence activities for high risk clients, and the final option is to formulate the KYC policy without external consultation, and the answer is B. Next question, a branch manager notices a customer frequently inquiring about depositing large amounts of cash and asks how quickly those funds would be credited without providing clear source of documentation. So, what should be the branch manager's next step? The options are to approve all future deposits, B, to report this inquiry to the AML unit, C, to ignore the inquiry, or D, inform the customer such questions are normal. And the answer is B. Next, how frequently should a bank's KYC policy be reviewed as per the responsibilities of the Board of Directors? Biannually, minimum annually, quarterly, or every 2 years? And the answer is annually. Next question, the board reviews a quarterly audit note highlighting persistent gaps in customer risk categorization across branches. So, what should be the next immediate step? A, ignore the note, B, blame the branch managers, C, refer the gaps to the designated director, or D, suspend operations of affected branches. And the answer is C. The fifth question, who among the senior management is primarily vested with the responsibility to ensure overall compliance with the obligations under PMLA? The options are Head of Sales, Chief Financial Officer, Designated Director, or the CTO. And the answer is C, Designated Director. Next question, a principal officer faces delays in collecting reports for suspicious transactions from a processing unit. What is the principal officer's best course of action? A, file incomplete reports, B, wait for next quarter's reports, C, ignore missing informations, or D, coordinate proactively with the unit to ensure timely report submission. And the answer is D. Next question, for a company who typically serves as the designated director, A, the CFO or the Chief Financial Officer, B, the head of the human resource, C, the MD or the whole-time director authorized by the board, D, a senior manager appointed by the CEO. And the answer is C. Next question, an account opening center approves a savings account without verifying KYC documents due to workload pressure. Which risk is the most heightened due to this lapse? A, money laundering or terrorist financing risks, B, operational risks, C, market risk, or D, interest rate risk. And the answer is A. Next, as per Rule 7 of 2 of the PML rules, what is the primary responsibility of the principal officer? 1, to oversee the bank's investment portfolio, then to manage the bank's branch network, C, to submit prescribed reports to the FIU IND within specified timelines, or D, to resolve customer complaints directly. And the answer is C. Next question, AML monitoring unit software generates alerts based on old red flag indicators resulting in many false positives. What corrective action should the unit take? A, ignore false positives, B, use manual monitoring only, C, stop using the software, or D, modify and update the red flag indicators regularly. And the answer is D. 11th question, staff at the branch learn that a STR has been filed for a customer's account. The customer asks about unusual account monitoring. What should the staff do? A, tell the customer about the STR, B, reassure customer without disclosing monitoring details, C, close the account immediately, or D, inform the customer that it's a routine check. And the answer is B. Next question, beyond checking KYC documents, what additional responsibility do account opening processing centers have? A, to ensure customer risk categorization, B, to approve all loan applications, C, to manage the bank's investment products, or D, to handle international remittance. And the answer is A, to ensure customer risk categorization. Next question, what must be maintained for the stipulated period regarding KYC AML as per regulatory requirements? A, training calendar, B, customer complaints, C, transaction data and KYC documents, or D, sales records. The answer is C. Next question, how frequently should the audit function typically carry out an audit of various functional units handling KYC AML related functions? A, biannually, B, quarterly, C, once a year, or D, every 3 years. Answer is once a year. Next question, who ensures the implementation of the risk-based approach for customer, product and process categorization? A. Designated director, B. Branch manager, C. Customer service, or D. Audit unit? The answer is designated director. Next question, which principle best describes the board of directors' role in ensuring segregation of duties to prevent the risk of money laundering? A. Risk-based allocation, B. Functional independence and oversight, C. Market-based monitoring, or D. Customer-centric service? The answer is B. Next question, in implementing a risk-based approach, what is the critical factor the board must ensure about customer categorization policies? A. Customer preference prioritization, B. Compliance with the minimum regulatory KYC norms, C. Periodic review and dynamic risk assessment, or D. Manual updation once every 5 years? The answer is C. Next question, what is the primary purpose of whitelisting accounts within AML transaction monitoring? A. To exclude the low risk accounts from unnecessary alerts, B. To restrict account holder transaction limits, C. To enable exclusive marketing campaigns, or D. To automate closure of dormant accounts? A. To exclude low risk accounts from unnecessary alerts. Next question, what is the critical challenge addressed by modifying red flag indicators regularly in AML monitoring? A. Increasing audit frequency, B. Reducing false positive alert, C. Increasing suspicious transaction reports filed, or D. Automating customer onboarding? The answer is B. The 28th question, why are concurrent audits considered as a critical control component in the KYC AML framework? A. They provide real-time fraud detection, B. They independently verify compliance and identify gaps, C. They approve large-scale transactions, or D. They replace the need for training session? The answer is B. Next question, which factor most influences the size and structure of AML monitoring units in a bank? A. Number of branches, B. Business diversity, geographic spread and agency relationship, C. Revenue generated per product, or D. IT infrastructure availability? The answer is B. Next question, which reporting is typically not handled by the same AML unit managing STRs? A. Cash transaction reports, B. Non-transactional reports, C. Counterfeit currency reports, or D. Suspicious transactions reports? And the answer is C. Next question, what is the key advantage of separating AML units into operational verticals instead of business verticals? The options are enhanced independence from business pressure, B. Reduced compliance costs, C. Faster product development, or D. More direct customer engagement? The answer is A. Enhanced independence from business pressure. Next question, a financial institution has recently launched a new digital lending product. This chief compliance officer needs to ensure that the processes for this new product are KYC compliant and that the business plans adhere to legally acceptable standards. So the question is, who among the following is primarily responsible for overseeing that the bank's products and processes are KYC compliant and business plans are based on legally acceptable business? The options are principal officer, designated director, head of transaction pricing unit, or the AML monitoring unit. The answer is B. Next question, the customer attempts a large cross-border transaction before processing. The bank needs to ensure that all necessary KYC related documents are in order and checked for any discrepancies. So the question is, which unit is responsible for checking KYC related documents and information as required, especially for cross-border transactions, and for verifying documents for any unusual or revealed discrepancy? The options are AML monitoring unit, branches, field units, the transaction processing unit, or the principal officer? And the answer is the transaction processing unit. So that was it for the MCQs of this chapter. I hope it was helpful to you, and thank you. Do like, share and subscribe this channel and wait for the upcoming videos. All the best. Thank you.